So I hope you won't take that all too badly.
No, I don't mean it personally either. I would love to see you. Just give me a second. My wife is making something downstairs. Yes, so we're going to start in a few minutes.
Yeah, that's great. So you give me some time. I can try to switch on Julian.
Okay. And I'll have complete quiet on my side in a few minutes.
Thanks.
Okay, I'm back.
Yes, I'm not. I haven't. Okay, I think this is going to work now. I just found a way to do that.
Ready.
Okay. It's all about adding. Now the picture is. I'll have your picture for some reason. I'm not saying I'm trying to get rid of that, because you would take it badly.
Oh, the one on Skype or LinkedIn?
Skype.
Okay.
No, it's not just your pic, it's your video.
Okay. I see. Okay.
Right. So Julian, hi. How are you?
Hi.
Are you with us?
Yes, I am. Can you hear me?
Absolutely, I do. Chris, the same with you.
Perfect. Hi, Julian.
Hi.
Okay, great. So I guess we're all set, and perhaps we could start. Okay, Chris?
Yes.
So did you receive and had a chance to look at the list of suggested questions I've sent you yesterday night?
I did. I think it's a great way to start and go through the flow of the discussion.
Okay, fantastic. Basically, whenever we go over a question, you're free to say, well, I'm not too interested in this one, so let's skip it, or answer it right now, and we'll transcribe it, or tell us that maybe you'd like to go into some more detail in writing at a slightly later stage.
Yeah, Eric, just to confirm that point very quickly, I'm assuming this would be very much like what we did with the captive interview, that I can really answer all the questions that you've laid out, some in more detail than others. You and your team would transcribe that, and you send me a draft. I can then work on that draft accordingly, make sure the facts and figures are correct, and then send it back to you. Is that the way we're going to do it?
Yes, absolutely. I would say, needless to say, but it's better to repeat it, and you're absolutely free to add, take out, change whatever you want in the thing. And I expect it to be much easier to do this time because we only have one person to deal with as opposed to four, including Generali's headquarters last time. So, by the way, my apologies for the mix-up. It's all my responsibility.
Oh, no problem with that. I wasn't referring to that either. Not a problem. I just wanted to make sure that was what we're going to do, because I found that process really effective. I've done a lot of been working in InsurTech for a while. I think I can answer these questions to the best of my ability. but having the chance to then see the text and revise it accordingly, use better language, make sure facts and figures are correct, it's just a perfect have the best product possible.
Okay, excellent. All right, and also, just like the last time, I'm going to record our conversation. It's going to be used for transcription purposes only and be destroyed afterwards. If that's okay with you.
Okay. Sure.
Okay, thanks. So, Chris, perhaps you'd like to start with stating what your role in your new company is and where you're coming from in terms of your career.
Sure, I'd be very happy to. Well, currently, and since April of this year, I am a partner at EBCG, which is a full-service employee benefits consulting firm headquartered in the Chicago area with 4 offices across the United States. We work with both large and mid-sized companies in the U.S. We're also a member of the Worldwide Broker Network, which allows us to assist our clients in over 100 countries around the world. In terms of my career, I've been in the employee benefits and healthcare business. Let me restate that. I've been over 35 years of experience in the healthcare, digital health, and employee benefit industries in the U.S. as well as globally. In that time, I've held senior leadership roles with overall P&L responsibility, both globally and in the United States, at large publicly held organizations as well as fast-growing startups. In addition, I've had a chance to have 2 very interesting positions in my career. One was serving as CEO of the Willis Group, based in New York City, for the employee benefit practice. That was over $500 million of revenue and 3,000 employees in the U.S. and internationally in more than 70 countries around the world. In addition, most recently, I had a chance to work for a startup called Vita Health in San Francisco for 2.5 years. It's a company that deals in the chronic health area, chronic condition area, both in the U.S. and globally, and learned a great deal about startups and what works, what doesn't, and most importantly, how it's different from the corporate environment. So those are 2 interesting positions I've had in my career, which I think where I learned a great deal.
Okay, many thanks. Let's move on now to the definition of high tech, which seems to me to aggregate a lot of very different things, and in some cases it seems to be used more as a marketing ploy rather than being anything real.
Sure. The definition of insurtech, in my mind, the word insurtech was inspired by and is a subset of the term fintech. For the financial services industry in general. It is a technology behind the creation, distribution, and administration of insurance business. In other words, it is a term applied to the many aspects of, or many segments of a new technology that are disrupting the insurance space.
Okay. So should we start perhaps with some numbers? Do you have any that could basically characterize the insurtech landscape?
Yeah, I'd be glad to. I'll preface my remarks by saying that I think the debate about insurtech is over. Up until recent times, we've only seen it being talked about by early adopters, but it's crossed that threshold fairly recently, the last year or two, from the early adoption phase to mainstream adoption of insurtech in the U.S. and around the world. You can see that. It's symptomatic of that is the amount of discussion and debate in the insurance industry that you see and hear daily by virtue of also us doing this interview for GBV. And also the major insurtech organizations that are rising and going global, such as Plug and Play Tech Center in Sunnyvale, California, where I'm an advisor. That's an incubator for small tech firms in the insurance industry, both property, casualty, and benefits in the U.S. and globally, as well as major industry conferences such as InsurTech Connect, which was presented by Oliver Wyman and included insurance industry leaders who attended from around the world. That's an annual event. So the focus now is how to maximize the opportunity in the insurance industry. In terms of some data, which also I think illustrates the rise of insurtech and how important it is, the global insurtech sector investment has increased at a compound annual growth rate of 36.5% between 2014 and 2017. In addition, the number of deals in the same period rose by 29%, about 94 in 2014 to 202 in 2017. There's been about $5 billion invested in insurtech thus far, and the increase in VCs investing in insurtech has been fairly dramatic. Looking at this by industry within the tech industry, within the insurance industry, and then globally, about 46% of insurtech activity has been on the P&C side, 33% on health, and 20% on life. But the health and life sector is growing faster, I believe, than the P&C side. In terms of geography, the U.S. has been pioneering market for insurtech, particularly out of Silicon Valley, but now in many segments or geographic areas of the United States. But 45% of insurtech is now coming from the U.S., 40% from EMEA, particularly UK and Germany, and about 15%, a growing 15% in Asia, particularly China.
Great. And are they addressing more the individual/retail business? Is it more the large corporates? Is it the SMBs in between? Is it just everything at this time?
Yes. 40% of insurtechs, according to McKinsey, have a value proposition built around finding new ways of growing, i.e. by introducing new products or services or entering new segments, and the other 22% are focused on lowering acquisition costs by providing customers with a digital interface. The remaining insurtech firms have built a value proposition around lowering costs for policy administration and claims management through digital processes. Like fintech, the focus of insurtech has been on the retail segment historically. 75% towards the retail client. However, there's been a shift recently, very much so, to the commercial segment. For example, the employer segment, especially in the benefits area, but also in P&C too.
And why is that? Why did they, in your opinion?
Well, I think many early insurtechs or digital health firms have a focus. They feel that the employer segment is ripe for change, ripe for increasing efficiencies and better engagement of the employees. So that's one of the reasons why that is taking place.
Okay, could we perhaps go back a little bit on the components of the value chain that insurtechs today are addressing, or that the newest just sprouts in the insurtech landscapes will address in the coming months or years? I'm talking about here disaggregating between the intermediation and sales phase, reinsurance, direct insurance, or select processes. I'm under the impression that they began with the select components of the claims processes or perhaps underwriting processes, and now are having perhaps a more integrated view.
Right. A couple of points. Insurers have been following the same path as fintechs or banks, responding to the challenge of the technology industry. New banks and fintechs are increasingly becoming partners in ventures where the incumbent, the bank, retains the ownership of the customer while fintech helps improve the user experience. So I believe that insurtech is really following the same path. For example, learned recently that most insurtechs are focused on enabling the insurance value chain as opposed to disintermediating it or disrupting it. Again, a recent McKinsey survey showed that 61% of the time it's enabling the value chain where insurance companies and technology companies are partnering to do that, and only 9% is disrupting the full value chain, i.e. disrupting the insurer. So that's not often thought to be the case, but that's what the surveys are finding.
Okay. Does that mean that InsurTech slowly are getting to the core of the insurance business, which is about assuming and destroying risk, as opposed to selling financial products? Because I haven't seen that many that have set up as a pure player, a real insurance company.
Yeah, it's a really good point, and I agree with you. I think that definitely working for a startup, I can understand how the capital requirements and regulations that need to be looked at very, very carefully and abided by as a central part of your strategy. It's very difficult for a tech startup particularly in seed round or particularly even A, B, or C rounds. That's quite a hurdle to overcome. So that's one of the issues. And also, maybe it's instructive to look at the definition of unicorns. Unicorns in Silicon Valley and now around the world have been defined as those tech firms that reach at least $1 billion of valuation. And if you look at the ones that have reached that point, only one that I could see is really, let's call an insurance company. Gusto is one, and I'll focus on the benefits side because most of our audience will be those interested in employee benefits as opposed to property and casualty. One is Gusto, G-U-S-T-O, which is cloud-based HR and benefits. Another one is Zenefits. Of course, their valuation has gone down in recent years, which has been involved in payroll, HR, and in health insurance, but more as a broker rather than a provider. And Oscar is actually in digital health, more seen as a type of insurance company. So, yeah, I do agree with that. You have very few examples of tech firms becoming major rivals to insurance companies. It's very difficult to surmount those capital requirements and those regulations. And there's easier ways for tech firms to have a great product which can help an insurance company be better at what they do through some kind of partnership or through acquisition. So I think that's some of the points that I've seen in the industry and why you're not seeing too many becoming insurers.
Okay, thanks. Staying perhaps for a few more moments on the InsurTech landscape, who really are the investors in InsurTechs?
Sure. I think it's three major sources or areas. First of all, most predominant, I believe, is venture capital firms. Those that both specialize in the insurance industry or the healthcare industry across the U.S. and across the globe. They're predominant for tech firms which need initial seed funding or Series A, B, and C, and beyond funding. There's been a huge increase in number of VCs investing in this area, particularly in the area of digital health, which I see to be probably one of the most predominant areas in terms of size and scope globally in the future. In addition, you see some private equity firms getting involved, but typically without hard and fast rules. Private equity is looking for firms which are well beyond proof of concept and have typically grown quite fast, grown very well in the top line, the bottom line, and they're looking for the larger firms, the PE firms are, to invest in. So it could be PE, but less so than VCs. And then thirdly, insurers. Insurers are both partnering as well as setting up divisions for both financing tech firms as well as potentially, I would say, partnering initially, which I think is a sensible thing to do, and then if that partnership goes well and there's tremendous synergies between the partner and the insurer, purchasing, buying out that tech firm.
All right. Now let's move on to the focus of InsurTech today and tomorrow. What if we look at today? Which InsurTech products or services are really being put to use in the market, either directly or through carriers?
Sure, and this is across the board, Eric. I've got a so-called top 10, which includes both property casualty and employee benefits. And I'll just read them off really quickly and be brief about this, and in no particular order. One is ride-sharing solutions. Number 2 is the usage-based insurance, i.e. pay-as-you-go. Mm-hmm. Number 3, new models of advice, both insurance advice and investment advice, typically utilizing artificial intelligence, self-directed services, connected health and medical advice or devices, wearables, etc., like an Apple Watch or a Fitbit, connected smart car that would impact auto claims frequency, etc., remote access data capture becoming very important, and data analytics is becoming a huge issue and opportunity. Robotics, for number 8, robotics automation in core insurance. Number 9, blockchain and how that's going to affect insurance contracts and security of data globally. And then number 10, digital health technologies focused particularly on chronic disease, where 86% of claims cost in a self-insured environment in healthcare is due to chronic conditions among the population, which is particularly becoming a problem and an issue in aging societies around the world.
Okay, I think that's very useful, and we're going to do also a table out of that. Just to be clear, this is today, right?
This is today. It's a very fast-changing industry, virtually weekly, monthly. So one of the challenges is to be up to date and a bit ahead of the what's happening and the trends out there. But this, yes, is fairly new information. Matter of fact, in all of the data I'm providing today and my commentary, it is as of 2018 versus 17 or 16. To use data from those 2 years would be out of date completely by this time.
Great. And so what do you see, what do you think will emerge in the coming, let's keep it to the next 6 to 12 months?
Sure. I think there'll be this trend we're seeing, which is now mainstream, will continue. Absolutely will continue and become stronger. However, I don't mean to infer we're going to see huge disruption and challenge and huge disruption in the marketplace. I think we're going to see gradual changes, and due to how these firms grow, the adoption time frames, how fast insurers want to change, but there's still some holdouts out there who may not want to change or want to do change in a slow method. I think we're talking about the next 5 to 10 years being really dramatic in the change in scope and focus and outcomes in the insurance industry as this technology boom continues. I will say that the area I think that could be one of the very largest, you have to look at where the money flow is. And I mentioned that $5 billion so far has been invested in InsurTech as of 2018 across the board. Let me give you some other numbers. Healthcare is easily the largest area of employee benefits. If you're an insurance company or a consultant, it's where you're going to spend most of your time, typically. The healthcare industry, to the best of my ability to get the best numbers, the private healthcare industry globally is over $12 trillion industry. And it's increasing by close to double digits in inflation, healthcare inflation per year, probably in the 8 to 9% range globally. So not only large, but also growing very fast. Not many areas of a company's P&L that would grow that fast. In the U.S., it's $3.2 trillion, which is 20% of our GDP, growing at about a 6 to 8% clip per year in terms of inflation. The reason I bring this up, one of the big areas I see growing substantially in the future is new technologies aiding individuals, employees, clients of health insurers, or clients of doctors and hospital chains in identifying and attacking early chronic conditions, whether it's one or two or more. As I mentioned, in aging societies, United States, Western Europe, Korea, Japan, and I can go on and on. There's others, too, that are going into that area. 86% of the claims cost in these societies, up to 86%, is from chronic conditions alone. So if technology can provide easier identification, quicker identification, easier access, greater engagement of individuals who have one or more chronic conditions, then you could see a significant ROI in this huge cost area future.
Okay, great. I was under the impression, but I may be wrong, that most insurtechs that are operating today with anything like a significant size tend to be distributors or contributing to the sales and marketing and, at large distribution side of the business, as opposed to a risk carrier, as we said earlier. Now, is that a sign that basically brokers and tied agents are really inefficient, or is it really the barrier to entry that that resides in regulations and capital requirement?
Well, speaking about the broker consulting industry globally, they've been challenged with identifying the speed and strength of this rise in insurtech and its applicability to their clients. I must admit, many of them have been quite slow in recognizing this. Others have been faster to do so. But because it's now mainstream and such a major area of influence, every broker consultant out there has to be fairly proficient, whether it's employee benefits or property and casualty, in understanding of the hundreds, if not over 1,000 tech firms in the marketplace. It's a huge number, which rise to the top, being qualitatively some of the best in the market for their clients and helping their clients adopt some of these new technologies where it makes sense in their property and casualty insurances or for their employees. I think there's a race for these brokers consultants to be more proficient and catch up and be really good at that. In addition, number two, I think it really is secondary to their clients' needs. They have to understand what of these technologies can we adopt in our own firms so that we're more efficient, we drive our costs down lower, but more particularly in the way we deal with our clients, where we can engage with them in a better way than we could before. So it's both what technologies are best for our clients in what areas, and how do we best advise our clients, number one. Number two, what of these technologies can we bring into our own operations to increase efficiencies internally, lower our costs, and do a better job of servicing our clients.
Right. What kind of, when you observe, especially insurance/reinsurance organizations, that is, risk carriers, what kind of challenges, what are the main challenges they encounter when trying to embed or implement insurtech components into their own processes?
Yeah, it's a really interesting point, and I have some illustrative examples. First of all, as you would imagine, the culture of a insurer, which is more corporate aligned, versus a tech firm, which is very much based on entrepreneurship and desire to make a huge impact in the market in several ways, completely different cultures. How you bring these two cultures together can be quite problematic. But I think what most companies are beginning to do, and very much in the fintech model, insurtech is following the same model. You find many insurers, most I would say, who believe that they need to identify what their key issues are, how can technology help them improve in those key areas, and it's probably smart to partner with the best firms that you identify in those areas that can help you improve in those key areas. And if you like how the partnership is developing and it reaches all its key goals, perhaps then to buy. So that concept of partnering first, learning together, inculcating cultures, and then moving on through an acquisition is probably the most intelligent way to do it. You've seen some interesting developments in the market that have backfired, I'll say. For example, Zenefits was probably the high flyer in the employee benefits industry, the major tech firm that everybody noticed that they said, Zenefits said themselves, was going to take over the benefits world and really put a lot of brokers out of business, if not the entire broker community. That was a statement that came from their CEO at that time. However, they had certain things that occurred in that firm which led to them derailing their goals and their future. I think one of the main reasons why that happened, people who develop starts and then develop tech firms tend to be those who really love and want to be in the tech industry. They're technology individuals. If they don't understand the insurance industry they're trying to improve as well as technology, I think there can be a lot of failures. So it's incumbent upon technology leaders not only to be great technology people, but also people who understand the industry that they're in. And I think there's been a lack of that in some cases. So that's an important issue.
Yes, without wanting to pound on Zenefits, my assessment is...
No, I was thinking we might want to change that a little bit.
Yeah, we'll see how we put that in the final version, but then perhaps it's just an aside. My assessment of the Zenefit situation was they tried to play it the Uber way, which is disregarding or just forgetting about regulations. And apparently the insurance regulators were a bit stronger than the taxi regulators and came after them. Is that correct? At least that's the way it was positioned.
Yeah, that's technically correct. I didn't want to say that, but that was technically correct. And this is offline now. They actually the CEO committed a felony by building a software package which allowed their inside salespeople, they sell only over the phone, to pass state licensing tests without studying or even taking the test themselves. That's okay. Exactly what happened. However, even if that didn't occur, Eric, I think the seeds of failure, again, this is offline, I can reword this when I get the text. The seeds of failure in that firm were already there because they believed that being a smart technologist could conquer the insurance world. What do those people know? And the learning was that if you're going to be a great technology company, you have to be both great in technology, but you have to be at least as good as your competition in the industry you're changing. It's not a trite concept. I think it's a very important lesson learned.
Yeah, I think that's a great point. So if I were to invest today, either my time or my money, in InsurTech, which sector would you recommend? As a growth strategy, again, not a value strategy. Value strategy, I'll probably take Zenefits because it's so way down, can only go up.
Yeah, because of the size and scope of the healthcare industry and the difficulties that various societies are finding in cost, access, and quality, all three, or one or two of those three. In combination with the inflation inherent in that industry of close to double-digit numbers globally, I think that is the number, or the area, that's ripe for improvement, efficiencies, greater access, and greater engagement of the individual. And increased prevention of diseases which are preventable if they're caught early and the individual has the right treatment. I think technology that is currently available and is changing and growing all the time, that is the area I think is most interesting, because the sheer size and the problems that industry is finding. I mentioned it's a $12 trillion industry globally with close to, 8 to 9% inflation. So that's the area I think has the most interest for me, the most growth in the future, and the most opportunity for great success.
Okay, so perhaps we should move on now to your own company. What kind of initiatives have you has the company led in or taken up in that has a relationship with the InsurTech?
Sure. Well, first of all, it's really twofold in terms of our view of InsurTech. Again, we're an employee benefits consulting firm, both for large self-funded and mid-market self-funded firms in the healthcare space in the U.S. and globally. So number one, our greatest focus is making sure that among the hundreds, if not thousands, of tech firms out there, that we understand who some of the best are, the leading, I would say, 5 to 10 in each of the key areas, so that we can bring to our clients when they need it the best companies and advise them what those companies can do for their firm, which is obviously a key issue for them. That's number one. We do that in several ways. First of all, I'm an advisor to Plug and Play Tech Center in Sunnyvale, California, that has recently gone global and now is in 6 countries in Europe as well as Asia and Latin America. They're one of the world's biggest incubators. So we're constantly meeting new rising tech firms, either in the seed or A and B rounds, in the digital health space, in chronic conditions, disease, or it could be in other areas too. So we try to keep our fingers on the pulse of what's happening so we can advise our clients accordingly. The era of early adopters in the employer space, being the only ones who adopt these new technologies, is over. It's now become mainstream. The issue is employers are very much challenged by all these different firms. What do they do? How are they different? And they need someone to help them filter what their key needs are and who are the best technology firms to solve those key needs. That's number one. Number two, as I mentioned, we're also interested in these firms that can help us be more efficient in our administrative processes internally, our operations, and also how we liaise with our clients and can get greater engagement with our client and faster service via those technologies.
Okay, great. By the way, did you see any WBN members coming to you for advice in this respect?
It's interesting. At WBN, we are very much looking at now InsurTech in the property casualty and the benefits world globally within the WBN network, and looking for ways that we can understand the best firms out there, how we can help our clients in a best practice model, matching them with the best technologies, and again, how we can, as local brokers, consultants in all the markets where we are, adopt some of these technologies to make us differentiated in the marketplace. We already have numerous examples of that with members of WBN around the world. We're simply harnessing this in a more cohesive strategy, putting some manpower behind it, and you'll be hearing more from us in the future about how we're going to progress in this area.
Okay, great. So, now to be a little bit provocative, perhaps, InsurTech is taking our world of insurance by storm. If one is allergic to InsurTech, is there any island of tranquility that one can escape to in terms of a niche in the insurance business that would not be touched, at least at this time, by InsurTech? Or is all hope lost?
I think all hope is lost, but that's not a bad thing. All of us have lived in a world of constant change all of our lives. So it's really just part of the environment, part of the backdrop, right? This is no different. But we really have crossed that threshold between the early adopters focusing on this to it becoming mainstream. So if you want to thrive in the insurance industry in the future, you really have to understand this area, pay attention to it, educate yourself about it, and adopt to it. I think it's become that point, so it's that important.
Right. But then building on that point, if I look at my experience, and I suppose yours is the same, going back all the length of our careers, our companies have been early adopters or users of computing, computer languages, networks, even before, way before the internet. We also always have used people called actuaries who were doing big data without knowing that they were actually or calling that big data. So we use data warehouses. Today it's a data lake, but basically it's the same thing. So what's so new about this insurtech movement?
Well, I think there has been a bit of a clash in resistance, especially via the insurance community, insurance company community, in being slow to adopt in the early days and realize how important this trend is. And there's probably many reasons for that. I think it's a belief that, well, first of all, these companies are structured in a corporate way, and it's very heavy compliance rules and regulations. And I think just the culture tends to be status quo rather than substantial change in a short period of time. But like the banking finance industry learned, as I mentioned, InsurTech is following a very similar path where insurance companies have realized to provide the best advice, the best products and services to their clients, they have to adopt these technologies which are have changed the market and improved on the product base in many instances, which we talked about today. And I think they're now opening up their eyes and making some changes and speeding up the process of adoption and bringing some of these firms into their own to make these changes. I'm not sure I said it the way I wanted, Eric. I'm just offline for a sec. I hope that answered your question.
Yeah, perhaps another interesting perspective would be that the change or improvement that we had through computers and having networks linking to distributors and all that number crunching and so forth was mainly internally driven. Today it's more adopting innovation which has been developed by totally separate
Sure.
and outside entities, and trying to embed those in existing or close to existing or replacing existing processes.
Yeah, exactly. Maybe the better way to answer your question is that there's very few examples of insurance companies developing their own tech products that compete against the best tech products from technology firms. And I think the reason for that is these are insurance companies who specialize in all the things they need to do to become a very competitive insurer. They're not technology firms. So they won't produce the best technology. So I think they've learned over a period of time that the best way to adopt this technology is to identify and partner with the best firms that they need in the areas they're focused on, best technology firms, work together in a partnership format, learn from each other, improve how they do business as a result, try to adopt the cultures so you can commingle them, and then if it works well is to buy that technology firm. Insurance companies have the funds, and that's probably the best way to do it. So that's been the predominant model. For that reason, insurance companies are not technology firms, and vice versa.
Right. Perhaps to start running things up, what lessons learned from the near past, and what perspectives would you like to share with our readers?
Well, I think we're now in a world where, in this industry in which we all work, there's going to be substantial change in the future because of the mainstream now of technology in our life and how it improves our lives and the industry that we're in. I think we're going to see dramatic change over the next 5 to 10 years. I think it will take that long for a lot of this change to occur. But you're starting to see a pickup in the pace of change. Two examples which are quite interesting. One is in the healthcare area, the other in the life insurance industry. For example, United Health Group, the biggest health insurer in the United States and also quite large globally, just sent out a press release a few weeks ago that they've partnered with Apple on the Apple Watch. So the Apple Watch is now part of United Health Group's wearable device program that motivates people to walk 12,000 steps per day. Those who join United Healthcare Motion, it's called, can now buy and start using an Apple Watch, initially paying just the tax and shipping, and use the program rewards towards the purchase price of the device by meeting those goals. So if you meet those goals, i.e. 12,000 steps a day, the price of the Apple Watch could be simply the price of shipping and tax. So those insurers using technology to create incentives to improve the health of their insureds, lower the insurance cost, their cost. It's pretty exciting to see that. We're going to see more examples of that in the future. The other one is in the life insurance industry, and it could be in the reinsurance industry for life insurance too. But Vitality, part of Discovery out of South Africa, it's a wellness program, Vitality Wellness in the United States. They, several years ago, cooperated and partnered with Apple, much in the same way as United, but 2 or 3 years before them. And they now work with John Hancock Life Insurance, which is part of Manulife out of Canada, a global life insurer. And they have 2 term life products to reduce premiums and earn rewards for living healthy with the John Hancock Vitality Program. So if you abide by Vitality's wellness program and goals, you can actually reduce the cost of term life via John Hancock in this partnership. So quite exciting, 2 quite exciting but different examples, one in healthcare, one in life insurance, of how technology and insurers are cooperating, working together for better devices, better products for their clients, which potentially through incentives and reaching those incentives can lower the cost for the consumer.
Yeah, that's an interesting point. And by the way, I think that Vitality South Africa is also running Generali's Vitality program, from what I know. I'm not sure about that. I'm just inquiring at the moment with the Generali guys.
Yeah, they're a global firm, and they have similar products in different markets around the world. But they tend to have been the leader in this space in adopting these new technologies via Apple Watch.
Yeah, interesting. Okay, the very last question is really about Insurtech's potential divided by the different areas of interest for our readers. I'm not sure you want to cover that, but otherwise you're absolutely welcome.
Eric, if you could give me more background on that question, I'm sorry.
Yeah, it's basically recapping what Insurtech's potential precisely would be for local employee benefits, then for global mobility, also known as expats and travel insurance, then pooling and captives, and life health reinsurance.
Yeah, I think it has the potential to impact in the future all of those areas in different ways. We're already starting to see some of that taking place already, particularly in the local employee benefit area, which is the most predominant and costly among all the ones that you mentioned. I think it depends really upon how important the private insurance industry is in that market. versus socialized medicine. But you're finding examples of socialized medicine, such as the
NHS.
NHS, excuse me, needs more coffee today. NHS in the UK adopting these technologies, and other governments adopting these technologies almost as fast, if not faster, than some insurers. So you're seeing InsurTech making inroads both in socialized medicine and in private medicine, private insurance, employer insurance in different parts of the world. So I would say the effect's going to be greatest in terms of frequency and sheer dollars or cost with local employee benefit programs, but global mobility too in terms of engagement and access. And life health reinsurance, I just gave you a couple of examples. The reinsurers are very closely looking at and adopting digital health technologies which provide ways to prevent and have coaches help people on 1, 2, 3 chronic conditions that individuals may have, lowering the risk for the reinsurer and thus helping their main insurer partner too. So you're finding examples all across the board. But again, most prevalent would be local employee benefits, where the most cost is attached to that area.
Okay, excellent. Perhaps as a suggestion, maybe we could try to use the list of the 10 insure technologies that you discussed earlier and try to match each of those or not to the 4 areas we just discussed. Perhaps we could try to do that offline.
Sure.
Okay.
Sure. How did that go? I think it needs some work on the final text, but what are your thoughts?
Lovely. The only really negative thing is I just learned that I had to go from 11,000 to 12,000 steps a day to stay alive, which really ruins my day. So thanks.
That's a lot of steps, by the way.
It's okay.
That's a lot of steps.
I do 11,000 and then I go have a drink. But now I have to do 1,000 more before I compensate for that. By the way, I think this is excellent. We have a great base to move ahead. Julian will now play his magic with the raw material that we have, and so we'll be in touch real soon.
Fantastic. Thanks for your time today.
Chris, one question. I sent you that document from Diamandis.
Yes. I think I was assuming your reaction was similar to mine. I tend to become very skeptical of major pronouncements of huge, unanticipated, and irreversible change. Almost, I won't say doomsday, but all-encompassing change. I think the world is more complicated than that, and I think there will be dramatic change. However, I think it will take place over a long period of time, 5-10 years and on, and I think as it takes place, it'll become part of our daily lives, and we won't even notice it anymore. But to suggest it will put insurance companies out of business, which I think the article and perhaps either inferred or stated, I think is a bit over the top, and I'm not a believer in those major pronouncements.
Yeah, I kind of agree. Lots of, the guy demonstrated, he's famous, has been for a long time, demonstrates his lack of knowledge of the insurance industry and what insurance actually does, and it really speaks to the point that you indicated earlier, that you need to combine tech and deep knowledge of what insurance is all about and how it actually works.
Yeah. Eric, it's a huge, huge issue, and that's one of the things I learned from being in that startup. For the most successful entrepreneurs in the tech world who want to disrupt the insurance world are ones who, what's the word I'm looking for, are humble enough to know what they don't know and smart enough to challenge themselves to understand it as well as the top people in the industry, in the insurance industry. So if they have that technology know-how and really understand the insurance market they're trying to disrupt, there's a recipe for huge success. But so many don't have that humble attitude, and it backfires. It's a major issue.
Okay, great. Not sure we're going to print everything of that, or at least we won't quote you.
Very true.
Okay, thank you very much, Chris. If you want to add anything either now or later, you're absolutely welcome.
Well, I'll wait for the text, and I'll make the usual changes like I did in the captive document. Polish it a bit, send it back, and see what you think.
Okay, great.
Hopefully it wasn't too wordy. That's the most important thing. I try to be more succinct, but it's difficult with this topic. It's such wide-ranging and complex topic.
Oh, I think it's fantastic. And an interviewee who doesn't speak a word is... it's hard to write anything afterwards. So, no, we're absolutely grateful.
Yes, thank you very much.
Thanks, everybody. Have a great day.
Bye, Chris. Have a great day. Bye. Bye now. Hello. Okay. Problem with lights here.
Put the lights on and get the camera working.
Yeah, don't worry about the camera. I know you.
No, it's alright. I'm here.
Right. So, how are you doing?
Yes, very good. How are you feeling?
I have